Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into the latest shareholder report from Putnam Research Fund. Is it a treasure map or just a bunch of financial mumbo jumbo? Let's find out if this fund is a gold mine or if it's just digging a hole. This report covers the 6 months ending in January 2025. We'll be looking at what the fund invested in, how much it cost to run, and how well it performs. So grab your decoder rings and let's get started. First off, this is a semi-annual or twice-a-year report. It gives important details about the Putnam Research Fund from August of last year to January of this year. If you want even more info, you can check out their website or call them. It looks like they want to make sure everyone is informed. Let's talk money. This table shows the cost of investing in the Putnam Research Fund. If you had $10,000 invested in Class A shares, it would have cost you $52 over the last 6 months. That's like paying roughly 0.98% of your investment each year in expenses. It's important to know these costs because they eat into your returns. Here are some key stats. The fund had about 605 to 1, 17.5 to 1 assets, meaning that's the value of all their investments minus what they owe. They were holding a total of 175 different investments. The portfolio turnover rate was 22%. That tells you how actively the fund is buying and selling its investments. A high number means they're constantly changing things up. Now, where did they put all that money? A big chunk, 29.1%, was in the communication services sector, companies that keep us connected. 13.9% went to consumer discretionary, things people buy when they have some extra cash. Information technology took another 12.3%, so software and computers. Then 11% was invested into healthcare, which makes sense given how big the health sector is in our economy. And lastly, 9.9% went into financial sector companies. If you want to dig deeper, you can find more information about the fund on their website, including details on their investments, financial info, and even how they vote on company matters. It's all there for you to explore. Okay, let's quickly glance at the Class C shares. This table shows the cost of investing in the Putnam Research Fund Class C shares. If you had $10,000 invested in Class C shares, it would have cost you $91 over the last 6 months. That's like paying roughly 1.73% of your investment each year in expenses. This number is higher because of the type of investment accounts it covers. Now let's look into the Class R shares. This table shows the cost of investing in the Putnam Research Fund Class R shares. If you had $10,000 invested in Class R shares, it would have cost you $65 over the last 6 months. That's like paying roughly 1.23% of your investment each year in expenses. Now, Class R6 shares. This table shows the costs of investing in the Putnam Research Fund Class R6 shares. If you had $10,000 invested in Class R6 shares, it would have cost you $30 over the last 6 months. That's like paying roughly 0.64% of your investment each year in expenses. This one is lower than all the others and is probably better if you can get it. And finally, Class Y shares. This table shows the cost of investing in the Putnam Research Fund Class Y shares. If you had $10,000 invested in Class Y shares, it would have cost you $39 over the last 6 months. That's like paying roughly 0.73% of your investment each year in expenses. Also pretty low. Alright, now let's move on to the actual meat of the filing, the investments. To 6th of January this year, nearly all of the fund's investments, or 98.2%, were in common stocks. Within the aerospace and defense sector, they held stocks like Boeing, Howmet Aerospace, RTX, and Northrop Grumman. This shows an investment in traditional defense companies. In air freight and logistics, they invested heavily in FedEx. This suggests a bet on global commerce and the shipping business. Moving to automobiles, they have General Motors, but their biggest holding here is Tesla, which indicates a strong belief in the future of electric vehicles. Their bank holdings include Bank of America, Citigroup, and JP Chase, representing a broad investment in the financial sector. In beverages, they hold Coca-Cola and PepsiCo, classic consumer staples that tend to be resilient during economic ups and downs. In biotechnology, there is Abivir, Amgen, and others. And in broadline retail, it looks like there is just Amazon. In the capsule market side, you have BlackRock, Charles Schwab, CME Group, and TPG. In chemicals, they are invested in Corteva, DuPont, Linde, and others. The fund holds Vontier in the electronic equipment sector. Their entertainment picks include Live Nation, Netflix, Spotify, and Disney, suggesting a focus on digital media and experiences. MasterCard and Visa round out the holdings in financial services. In Grain Transportation, you have Canadian Pacific Kansas City and Union Pacific. In healthcare, they are in Abbott, Boston Scientific, Stryker, Becton, Dickinson, and others. Cigna, CVS, United Health Group, and McKesson are all healthcare providers the fund is backing. In hotels, restaurants, and leisure, they have Booking Holdings, Chipotle, McDonald's, and others. They have an investment in Poltag Group as part of their household durables investments. Clorox and P&G are the fund's household products investment. The fund also had investments in Honeywell International in the industrial conglomerates area. The investments on the insurance side include AIA Group, AXA, and Prudential plc. Alphabet and Meta make up the fund's investments in interactive media and services. Life sciences tools and services include Bio-Rad, Danaher, and Thermo Fisher Scientific. There are also investments in machinery with Fortive and Ingersoll Rand. The fund's exposure to media is Charter Communications, with only $500K. In metals and mining, the fund has Agnico Eagle Mines and Glencore. Amarin and Centrepoint are their investments in multi-utilities. The fund invested in Vornado Realty Trust in office REITs. BP, ExxonMobil, Shell plc, and Cenovus all take part in their oil, gas, and consumable fields. The fund also invested in the passenger airline Southwest. LA Lilly, Innoviva, Johnson & Johnson, Merck Makeup Pharmaceuticals, and others. Analog Devices, Broadcom, Nvidia, Qualcomm also form the investments in the semiconductor area. The fund's investment in software includes Cadence Design Systems, Microsoft Oracle, Roper Technologies, and Salesforce. American Tower and Gaming and Leisure Properties account for the Specializes REIT section. And in specialty retail, the fund invested in Home Depot and others. In technology hardware, they have Apple and Seagate Technology. They also have some investments in textiles, apparel, and luxury goods. Lastly, the fund invested in United Rentals as a trading company. Tut, that was all the holdings. Now that's a whole lot of different investments. It tells us that the fund is trying to be diversified, so it's not too heavily reliant on any one company or sector. Looking at the actual finances, the fund had over $605 million in net assets. During these 6 months, the fund's operations resulted in an increase of $53.80 million. That's driven by both investment income and gains on their investments. And finally, net assets over all classes actually increased. These financial highlights give you a look at how each share class performed. For Class A shares, the net asset value started at $53.18 and added $54.23. That means each share grew in value. The ratio of expenses to average net assets was 0.49% for Class A. That's how much it costs to run the fund compared to its size. For Class C shares, there was a 0.62% ratio. The Class R6 had a 0 of expenses. For Class R shares, there was a 0.62% ratio. The Class R6 had a 0.37% ratio. And as seen previously, we can see the portfolio turnover was about 22%. So, what does all of this mean? Well, the Board of Trustees approved the management and sub-advisory agreements after looking at factors like the services provided, the fund's performance, and the fees involved. They decided that the fees were reasonable given what the fund was getting in return. Now, for my take on Putnam Research Fund, the numbers look pretty solid. They've got a good mix of investments across different areas, and their performance has been decent. One strength is their diversification with investments in over 175 companies. This helps to reduce risk. Also, a lot of the areas are broad safe sectors, meaning that the fund's assets should be safe in an economic downturn or during a recession. However, there are some things to keep in mind. Expenses can eat into returns, so it's important to be aware of those costs. Also, market conditions can always change, so past performance is never a guarantee of future results. The financial sector may also take a tumble if interest rates stop going up. Overall, Putnam Research Fund seems like a reasonable option for investors looking for a diversified mix of stocks, but always do your own research and consider your own financial situation before investing. Thanks for watching. If you found this video helpful, be sure to like, comment, and subscribe for more corporate deep dives.